Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. SUVs finally edge out hatchbacks and sedans on Indian roads in the first half of this year. Car makers led by Maruti have a fresh SUV lineup for you this festive season. The rupee weakens past 80 to the dollar in early trade but pulls back below the physiologically sensitive level. The currency finds comfort on easing global crude oil prices and global dollar weakness. Dalal Street gains for the fifth day in a row despite heavy volatility. Sensex gains over 250 points. Nifty ends above 16,600. Capital Goods, PSU Bank rally. Gold falls to an 11-month low in global markets, trading at a 5-month low in India despite the uncertainty in financial markets. The question is, has gold lost its status as a safe haven for investors? Good news for air passengers. From now on, no extra fee to be charged to issue boarding pass at check-in counters. Aviation Ministry issued these new guidelines. The highly anticipated Nothing Phone 1 goes on sale today. Business Today TV spent a week with the handset and tells you whether it's much ado about nothing. That's coming up on the show. Industry pins hope on Ranbir Kapoor's Tara Shamshera to break the dry spell hurting the Hindi film industry. It's the first release for Ranbir in 4 years and also his first appearance after getting hitched to Alia Bhatt. SUV mania all set to catch hold of the Indian consumer this festive season. With more and more purchase decisions veering towards SUVs, car manufacturers have lined up a slew of new SUV launches just in time for the festive season. Here's how Motown is zipping down the SUV fast lane.
This monsoon season, it's raining SUVs in the Indian car market. Over the past 1 month, the Indian SUV market has seen manufacturers unveil one model after another, most of them set to hit the market just ahead of the festive season in September and October. M&M was one of the early ones to take the cover off its new and larger Scorpio, suffixing an N to its name, selling it as the big daddy of all SUVs. Hyundai belatedly updated its Tucson with the latest model available internationally. Though bookings have begun, sales will begin only later this year. French car maker Citroën expanded its portfolio in India by launching its mini SUV, the C3, priced between 6 and 9 lakh rupees. However, it's Maruti which has stolen the march on its competitors this summer, launching the all-new mini SUV, the Brezza, as well as getting into the highly competitive mid-SUV market with the all-new Grand Vitara. Built by Toyota in India, this vehicle will also be available in a new avatar as the Toyota Hyryder before the festive season begins. SUVs have literally driven into the Indian psyche. Their commanding presence, ability to handle rough Indian roads and their rugged build have endeared them to the Indian consumer. In the first half of this year, there were 12 SUVs of all shapes and sizes in the list of top 30 cars sold in the country, accounting for 41% of total volume. Another 4 were MUVs like the Innova and the Ertiga, taking up another 13%. There were just 14 hatchbacks and sedans, making up for just 46% of total sales. Even globally, SUV sales are eclipsing those of other car bodies. In the US, SUVs have captured more than half the market, up 6 percentage points in 2 years. In Europe, SUVs may be less popular than the US, but their market is steadily rising. India too has seen SUVs grab a greater share of market every year, reaching 38% in 2021.
I think the SUV segment is exploding. In fact, in 22, if you see, the contribution of SUV segment is now 41% to the industry, as against 34.7 for the hatch. So very clearly, SUV segment has overtaken the hatch. So the segment only keeps on expanding.
One Indian car maker which has turned its fortunes thanks to SUVs is Tata Motors. Its Nexon is a top seller today, with the Punch Micro SUV also setting sales charts on fire. Interestingly, the addition of affordable SUVs to their portfolio have also given a lease of life to Skoda and Volkswagen, which have seen their sales increase to respectable levels in the past few months. With Chetan Bhodani, Bureau Report, Business Today TV.
Well, it's not only the SUV frenzy that has gripped the automobile market in India. The growing footprint of electric vehicles is also very evident from the data churned out by our Data Intelligence Unit team. As per the Lok Sabha and Rajya Sabha responses from Parliament's monsoon proceedings, the annual growth of electric vehicles has been remarkable in India. EV registration saw a sharp spike of nearly 218% in 21-22, which is on a low base. The registrations more than doubled from the previous year, with nearly 4.3 lakh EVs booked in 2021-22. States like UP, Delhi, Karnataka, Maharashtra and Bihar saw the most number of electric vehicles currently being used on roads of India. While UP has more than 3 lakh running EVs on the road, Delhi, Karnataka and Maharashtra have between 1 to 2 lakh active EVs. Indian equity markets erased opening losses in a highly volatile session to end in the green for the fifth straight day. Sensex ending at 55,682, up 284 points. Nifty closing at 16,605, that's up 84 points. The broader markets outran frontline indices, with the BSE mid-cap and small-cap climbing 1.3% each. IndusInd Bank, L&T, Bajaj Finance, Tata Consumer Products, UPL, L&T, Bajaj Finserv, Asian Paints, Hindalco, some of the top gainers. While Kotak Bank, Dr. Reddy's, SBI Life, Cipla and Reliance fell the most, down up to 2%. The rupee continues to remain under pressure and ended the trading day marginally higher at 79.95 to the dollar. For the first time in 3 months, foreign investors have bought Indian stocks for 4 consecutive days. Seeing the current market up move, FIIs are back. But will they stay? Let's discuss it further with Sudip Bandyopadhyay, Group Chairman, IndiTrade Capital. Sudip, it looks like FIIs are back and in full force. What's driving that trend? What's bringing them back to Indian equities?
Well, a couple of things. I think one is the US markets have recovered, and that when the mother market recovers, it's got a positive impact on pretty much all the markets, including India. Also, the FIIs have realized that Indian markets have become relatively cheaper after the massive correction we have seen. Currency depreciation also makes Indian market a little more attractive, vis-a-vis what it was 1 month back. The same amount of dollar, they can buy more shares in India. So all this is making Indian markets attractive, and FIIs are coming back.
Sudeep, given that we've seen the rupee depreciating, but still not as badly as some other currencies, equally Indian equities have been somewhat cushioned by the retail investor. Do you feel overall India is still an attractive destination for FIIs to pump in money, versus some of the other emerging markets at the moment?
Absolutely. I think the moment we see risk-on move back for the FIIs globally, India will attract a lot of FII money, which is sitting in the wings. The other important thing is, if you look at Indian markets, what has been witnessed in the recent past is that though the many emerging global markets corrected by 25 to 30%, Indian markets only corrected at its worst about 15%. Now that does show the resilience of Indian investors and Indian capital market, and it augurs well for the future. FIIs will be emboldened by this fact that the flows of FIIs only doesn't determine the fate of Indian markets. Also, as you rightly said, the currency depreciation has made, to an extent, Indian market a little more attractive vis-a-vis 1.5 months back, when the rupee was much stronger, because the same amount of dollar, they get to buy more shares in India.
Okay. And what would you be looking to buy in a market like this? As you said, with the various current factors at play, primarily the currency, of course, along with inflation, and given that we're now in the throes of earnings season, what clues is it throwing up for you? Where do you feel, money is headed at this point of time?
Well, I think few sectors have been clear winners in this phase. I would say one is definitely the FMCG pack.
Yeah.
I think the reading is very clear that consumption is coming back. Yeah, there were some cost pressures in between, and there was little uncertainty over rural consumption. But the way the monsoon has been progressing, the expectation is that rural demand will bounce back. And with that, consumption-focused stocks in India, FMCG companies in particular, should do well. And I think that is leading to a run in the FMCG space. The other sector which we like and we've been seeing traction is BFSI, with credit demand growing on the back of consumption growth and also probably a revival in capex. I think the lenders are in a good spot. Also, the asset quality is improving remarkably and sharply. That is reassuring investors. So BFSI is another pocket, particularly large banks, both in the PSU as well as the private sector space, which is attracting a lot of investments.
Okay. And would you stay away from IT then, or what are you making of the recent spate of earnings?
Well, I think IT is a bit of a clouded feedback or clouded at least view at this point of time. There are a couple of things happening. One is there is a significant tailwind which is being added by the currency depreciation. All Indian leading IT companies derive a significant part of their income in dollars, and that is going to help them with a depreciating currency environment. On the other hand, the demand scenario, which there are a lot of commentary that there may be a problem as far as demand for their services are concerned going forward, considering that Europe probably will head towards a recession, US is going down, and there are growth slowdown in multiple other markets. The question is whether this growth slowdown will really impact Indian IT companies. At least the commentary of the management of these top IT companies doesn't seem so, because they are pretty confident of the demand, they're pretty confident of the future order flows, and they're pretty confident about margin improving in the coming quarters. So it's a trade-off, the way we read it, between demand destruction, which may happen in future, and currency depreciation, which is happening currently. As far as Indian IT is concerned, we are advising caution on the mid-cap IT, whereas the large-cap IT, if you have a mid to long-term view, I think it's good to go and buy.
All right. And one final question, Sudip, I want to just squeeze in on Reliance Industries. Where do you see the big boy poised at these levels, and what would be your advice?
Well, I think Reliance has been our favorite stock for some time, and I think there is a compelling reason to buy Reliance. The GRM, which is the refining margin is determined, is at all-time high Singapore GRM, and Reliance's refining margin also probably will hit all-time high levels in the quarter gone by. The petchem business, which was a little down earlier, also is expected to do well and is doing well at this stage. So the traditional business, the old business of Reliance, is on a very, very strong wicket, unlike other quarters. That is a very good news for Reliance. The second segment of the business, which is the new and emerging businesses, Jio is expected to also post good results in the quarter gone by. The ARPUs, which was kind of stagnant and not increasing for some time, has finally started going up, and I believe the trend will continue. The retail business is also seeing a lot of traction after the COVID-related lockdowns and other logistical challenges. So overall, all the business segments are expected to perform well, and we will see probably a significant bump up in their quarterly profit when they announce the same later this week. So yes, at current valuation, Reliance can be acquired for short to medium term.
All right, Sudip, thanks so much for joining us on the show today, and great to hear a positive outlook on the markets and the way ahead from here. Is gold no longer the safe bet investors make during times of uncertainty? Well, with the yellow metal dipping to the lowest internationally in nearly a year, the old maxim doesn't sound true anymore. In fact, it's the US dollar which has become the safe haven for investors. In India, gold fell to around 49,960 rupees per 10 grams. That's the lowest since February. In global markets, it fell to $1,691. That's the lowest since August 2021. So what's the outlook for the precious metal? My colleague Sakshi Batra spoke to Ajay Kedia and Vandana Bharti of SMC Global.
To begin with, Ajay, you first. What do you really make of the decline in gold prices? And the bigger question that everybody has on their mind, is it the right time to buy gold?
See, buying gold is always a right time. No doubt, since 2022 has been started, Indian market was slightly, as compared to global market, was slightly on higher side because of rupee weakness, or we can say import duty that has been levied by, increased by around 5%. That has been a little bit positive performance, we can say, since January. It has been around 4% gain. But overall, I am expecting in 2022 we have seen inflation concern or recession concerns were there. Because of that, purchasing towards gold was been slightly lighter, or we can say in all asset class has been slightly more volatile. So it's a temporary phase for gold. I think same has been seen in the year 2008 when global financial crisis has been hit. So initial may be possible for next couple of months, prices will be trading in a very narrow range, because already in last 2-3 months dollar index has rallied from almost 90 level to 109 level, which was the major factor for gold to underperform. Secondly, the interest rate hike. We have never seen so much aggressive steps taken by Fed. In 1980, we have seen this type of step has been taken by Fed in order to decrease the inflation. So timing, we expect prices should consolidate over here, but it is a very good time to buy, because whenever there is a concerns about recession or inflation, gold will definitely come back again. So I think it is a matter of time. Maybe we can see some consolidation, but overall it's good to buy at current level.
Yeah, right. Also, Vandana, I wanted to ask you as well that, right now 24 karat gold is near 50,000 per 10 gram today. The 22 karat gold is near 46,000 per 10 gram in the physical market. So what are you advising your clients? I mean, looking at the love that Indians have towards gold, are you receiving those umpteen calls, and should one really rush to the nearby jewelry stores to buy gold now?
Yeah, definitely, Sakshi, and thanks for inviting me first. And this is the golden time to go for gold. Because now we are seeing the circumstances. We are not expecting that there should be a sharp fall in gold from here now, and we are not expecting that this commodity should reach $1,600 in COMEX and like 45,000 in MCX. And if it goes below 48,000 in MCX, quickly it should see a rebound. So this is the time when one should go for buy in physical. Even in physical, Sakshi, 500 or 1,000 point doesn't matter to them, because whenever we go for physical, it is for the long time, and it is for generation to generation. So never mind this like a fall of for the fall of 500 to 1,000 point. So I'm expecting that this commodity should consolidate at the level of 48,000 here in MCX. On COMEX, I'm expecting that $16-20 should be a support level for this commodity. And overall, Sakshi, we are now in talk that in July and September, Fed is going to increase the interest rate, but now recession fear is there. So even there is a talk that maybe in 2020-23 they may go for the rate cut. So simultaneously we are hearing the talk of interest rate hike, and then in 2023 rate cut. So this is a very hush situation for Fed. Absolutely. So gold will take the benefit of doubts, and August, September onwards, I'm expecting a very sharp rise in gold prices. So yes, we have a golden opportunity to go for buy in this commodity.
Okay, golden opportunity to buy in gold. Ajay, since you were saying that you expect gold prices to consolidate a bit, are they going to fall from here? Vandana says 500, 1,000 more. What's your take? If yes, how much? What is the kind of target that you have on gold going forward from here?
See, in last few months, we have seen volatility in commodity market has been quite high because of many factors, maybe some geopolitical tension or movement in dollar or currency. So I think maybe we can see a fall towards 49 or 48,800 should be the best
Okay.
support on domestic side. Maybe because of rupee is slightly trying to re-strengthening by after the RBI and government is taking step. But I think
Sure.
as Vandana told, after August onwards, we expect there will be a sharp jump because in India we buy gold on emotional ground
Yes.
and also for investment ground also. So quarter four is going to be very much bigger for physical buying. So I am hoping by this year end again prices can come up around 52,500 to 53,000. But overall quarter four for India is always great to buy gold.
The process to set up the GST Appellate Tribunal has picked up pace. A group of ministers formed on the tribunal will meet first time in Delhi on the 26th of July. The group will recommend necessary amendments required in the GST laws and other legal changes to the GST Council. For more on this, we're joined by my colleague Karishma Asudani. Karishma?
Well, right. The first group of ministers on GST Appellate Tribunal is going to be meeting on 26th July in Delhi, and this is after the group was constituted by the council in its last meeting in Chandigarh. Now, what's important is to understand that this GOM is going to look at the legality of the whole structure of the GST law and to maintain the uniformity and the coordination between center and states. They're going to submit the report before July 31, and the report will be discussed likely by Finance Minister Nirmala Sitharaman in 48 GST Council in first week of August.
All right, Karishma, thanks so much for that. Now, Nothing, a London-based startup founded by Carl Pei, was supposed to disrupt the smartphone industry, and the much-awaited Nothing Phone 1 goes on sale today with a bunch of industry-first features on expected lines. But what is the real-world user experience like? Looking beyond the hype, Tech Today's Ayush Alavadi brings you an exclusive review.
It's not often that a startup from London enters the smartphone industry only to disrupt it. There's a lot of clutter, especially in the mid-range segment, and a company from London has decided to break that clutter. I have with me the Nothing Phone 1. Now, if you look at the phone, let's talk about design. If you show this to anyone in office or any family member at home, they will have a look at the back of the phone and say, hey, what kind of cover have you put on your iPhone? Because it does look like that at first glance. But if you're investing your hard-earned money in this product, you need to know that there are things that work for it and things that don't seem to work at all. People are talking about dead pixels, a green tint on the display. A lot of users who picked up retail units, very excited about the Nothing Phone 1, are complaining about these issues. If you're a gamer, this isn't an ideal phone for gaming. The camera performance is underwhelming. It maxes out at 4K 30. And honestly, if it's not a well-lit atmosphere over here while we're shooting, it's all right. If you take it to a low-light sort of surrounding, it starts performing really badly. We have updated the software on this particular device, but we haven't seen some of these things in practice. If you have a look at it, it's simple. It sounds fancy in tech geek lingo. It's 900 LED lights at the back of the phone. These 900 LEDs will pop up in the center, on the top over here, at the bottom, and they actually do have significant functions and use cases. For instance, this one at the bottom, if you're charging through a USB-C port, will light up and tell you what the battery status indicator is like. You give it a little bit of a shake, and all of a sudden you know what the battery charging status is like. You go up over here and you end up reverse charging, and this comes with reverse wireless charging and wireless charging for this particular device, and it's pretty good at that. The reverse wireless charging feature, I put my AirPods on it a few times, and honestly it's more of a gimmick because there's a lot of heat energy that is lost. Let's just put it this way, it's not as efficient. This device comes with a Qualcomm Snapdragon 778G Plus SoC. It comes with Android 12 out of the box with Nothing OS on top. The camera system is slightly underwhelming when it comes to performance, but just in plain specs, it's a 50 megapixel camera on the back, and it comes with a 4500 mAh battery which powers the Nothing device. Now let's address the elephant in the room, the Snapdragon 778G. This is clearly not a flagship processor. But this is not a flagship phone. This is meant to be a mid-range phone Two words that this company understands very well. Even before the company existed, everyone was talking about their marketing plan. And of course, Carl Pei comes from OnePlus and he set up a brilliant brand out there. So we do expect some great marketing. Well, I think this is a phone which is targeted at those people who are bored of all the devices in the mid-ranges from the Pocos and the iQOOs and whatnot, and want something which is kind of aspirational, kind of has a story, and honestly is a dark horse that's trying to break the clutter. That's what this phone is all about.
For now, it's goodbye from us. Thanks for watching.